Richard Teitelbaum, aside from the fact that the potential loss is unlimited, why is short selling the most dangerous trade?
Well, simply put, the natural bias of the market is upwards. So you're going against the consensus. That's the first thing. You're also open to short squeezes where long investors gang up, buy up stock and run it up, and you're going to be forced to cover over a period of time, and that can cost you a lot of money.
And a lot of people say it's un-American as well. But let's talk about some of the names and the people, the short sellers that you discuss in your book, The Most Dangerous Trade. One of them is Jim Chanos. He made a lot of money shorting Enron, shorting the AOL deal. Talk about his method.
Well, he's really the dean of short sellers to a certain extent. And he's very good on his research and getting into the accounting aspects of any particular short. But he's also identified several different types of shorts. And I think he's sort of a philosopher in this way. It can be a bubble, stock market bubble, housing bubble. It can be a fad. He identifies different types of short situations that he can profit from, and he's very good at executing, that simply.
And right now he's been short China. He's been short China for a while. It's only now probably starting to pay off. Another guy that shorts Chinese stocks specifically is Carson Block, aka Muddy Waters. Can you talk about what he does? Because he's really nailed a few Chinese companies, made a lot of money.
He has a great record. And what he's really been good at is identifying particular types of companies that trade in the U.S. And his theory was that they were listed on the New York and Canadian stock exchanges simply to attract foreign money, assets into these stocks. And he was very good at picking apart the financial statements and finding out that they really weren't all that they were supposed to be.
Another short seller you profile in the book is Bill Ackman over at Pershing Square. Now, he has made a crusade against Herbalife, but Herbalife has fought back. And he actually has not made money on this short, but he's going to pursue it to the ends of the earth. Can you talk about one of the dangers, this particular danger for a short seller, about companies fighting back?
Well, what happened here is that Herbalife was very successful in terms of attracting interest from people to disagree with Bill Ackman's take on this. And what happened was there was a rise in stock. We had Carl Icahn buying shares. We had Dan Loeb buying shares. And the entire trade seemed to go against Bill Ackman originally. Now, he's come back time and again with more information, more research, and at times he's been deeply in the red on this, and then at other times, as the battle has seesawed back and forth, he's come back and at least had a paper profit on occasion.
All right, and then finally you profile Doug Kass, who writes for Real Money, which is a subscription right here at thestreet.com. And the interesting thing about Doug Kass is that he shorted names like Berkshire Hathaway, some really big names, but he also is well known for going long the market in 2009 and really calling the bottom. So I guess short sellers, if they see an opportunity, even when it means going long, they'll do that.
Yeah, Doug is actually a very versatile type investor, and he turned around, went long the market, and then actually after he locked in some gains there, turned around, let the bear part of him get the better of him, if you would. And so he seesawed back and forth, but certainly has the conviction to go short names like, as you mentioned, Berkshire Hathaway, but Apple, and been very successful on those.
All right, well, thanks a lot for coming in and talking about short sellers. Richard Teitelbaum.
It's been a pleasure.
Thank you for watching The Street.